End comes around and just get me back up here. And claims is our big number today, but really the markets are really sort of in a bit of an abeyance at the moment, waiting for the two key events over the next sort of 5 or 6 key trading days. We've got the CPI number tomorrow, the Consumer Price Index from the United States, expected around 6.8%. So another tick higher than where it's been at 5.84% last time. It's quite a significant leap up. The transitory messages we all know now has been ditched by the central. But there's even talk of a 7% handle to tomorrow. Could freak things out quite significantly. We see a big rally in the dollar, but at the moment we're still sort of sliding sideways ahead of that data. Claims, remember, the jobs numbers have got much better. Certainly on a weekly basis, we had that record 52-year low, the low from back to 1969 a couple of weeks ago. And then it was revised lower again last week, 194,000 for the previous week. Last week was 222,000. Today, we're expected around 230,000 again. Let me just double check that. Remember, 215,000 on this particular calendar here from 222,000 last time. But it's still well below the seasonal average of I've said seasonal average, the average for this economic cycle in the season. So it's around about that 250,000. So we'll see what that number comes out later. We've got wholesale inventories as well. And we've had some quite a lot of debt from the government, from the US government this week as well. 10-year and 30-year options all gone out at relatively high levels compared to where we've been before. So, I say it's a bit of a wait and see. And then obviously next week is the key banks. We got the Fed top of the shop on Wednesday. Obviously, expectation before the coronavirus broke on the 26th of November, or the news about the coronavirus Omicron variant broke on the 26th of November, was that we were a full tilt ahead, really. We'd slipped very much to the hawkish side of things. The Fed itself, the centrists were sort of slipping towards the hawkish side. Powell was talking up, speeding up the taper. Then markets got ahead of themselves, assuming that meant that perhaps rate hikes were coming earlier than certainly earlier than had been planned. And so we were into the second quarter rate hikes story before the first half of the year is out. That has all probably slipped a wee bit now with the uncertainty about the Omicron. However, as far we're a week further into it now, sort of 10 days since it first broke as news, and obviously the transmittability of it seems to be much higher than any of the other variants, more so than Delta. I was reading this morning, it's four times more transmissible than even the Delta variant. But so far, touch wood, hospitalizations and deaths haven't sort of spiked up like they had last time. So at the moment, as I say, it appears to be more transmissible, but it's very early days. But perhaps less hospitalizations on account of it, as obviously the vaccine and the situation rolls out, and this story of boosters starts taking effect, particularly in high income countries. Yesterday, Prime Minister Johnson in the UK talked about new restrictions for England. It's probably a bit of a political manoeuvre as well, the situation he's been under this week. But anyway, he did act quite quickly on that, tightening things up, talking about vaccine passports and that sort of thing. But see how it all pans out. President Biden has committed not to introduce any more lockdowns. So see how the winter progresses. So we've got, let me just get rid of my ugly mug. There we go. We've got euro sort of slipping or holding over 113. This is 113, this big blue line here. We've rallied yesterday to 113.60 at one point. Now we've been down all day, so we're still tracking down. Ticked up a wee bit in the last hour. The data's 3 or 4 minutes out. So dollar index, we got to this 96.90 level yesterday. This is the daily one, isn't it? Yeah, this is the daily, sorry. towards the end of November. Now we've slipped down, but still held the key 96 level as far as the dollar index is concerned for most of November. We're sort of rotating through that on an end of day basis. Intraday, yesterday we went to 95.85, so we were down underneath it yesterday. We recovered into the 1 hour, the 1 hour 200 period moving average in the last hour or so. We've bounced off that so far. So 96 is our key support, and then that 200 hour intraday resistance sits at 96.11, and the top of the Bollinger Band is coming down to meet it at 96.80. So we've got 7 points there on the dollar index. There we go. It's from my colleague. So, good afternoon, anybody. Whether you're on Facebook or on YouTube, please stick your questions in the box and we can all share and have a look. So, dollar, still, let's go back to that daily number. So, really, we've had a strong run for November, a big strong dollar for November. Got to that 96.90 squeak, and we're sort of still holding 96. So, generally, if we've got the weekly chart, you can see generally the dollar's had a really good second half of 2021. So dollar index holding up over 96. And here on the weekly chart, that 5-week moving average sits around about 95.70. So as we go into the end of the year, 2 or 3 weeks left to run, after 2.5 weeks left to run, we're still obviously bid for the year as far as dollar index. So we started the year, remember, on the other extreme. We had a big week 2020 for dollar index. We were down here at under 90, and we've recovered since then. So some more questions coming in here. Let's have a look. So what's the fate of pound? Well, pound's very much under pressure, my friend. A couple of things going on. There's the political pressure, which really hasn't been mentioned in a lot of markets, but really it's real significant. There's a lot of unrest within. I'm saying a lot, might be overplaying that hand. Obviously, his opponents, Johnson's opponents in the UK, are very virulent, but his own main press seems to be turned against him so far today. It's obviously only one day. It's not really a trend. Unlike this one, this is the 4-hour cable trend. That is very much in the downtrend, my friend. So we're under 132. It's a key level. I don't know what time frame you trade that on. If we go in, but here the 1 hour, you can see it's still trading down. We zoom in, zoom out for the last few days. Let me just put the periods. There we go. So all week we've been weakening basically. So this is the 1 hour moving trend. You can see it's moving lower. There's lots of stuff going on here. This on these charts here. So the big gold line up here is the 200-hour moving average. So we're way below that. That's the 50-hour moving average, the blue line. We're under that. And this is the 20-hour moving average, the midline of the Bollinger Band. As you can see, we're just testing that at the moment at the psychological 132 itself. So 132, big round number. We're at a new year. We've pushed new year lows, 1 year lows for the cable pair, my friend. This is the daily. This is the 1 hour time frame for cable, guys. If you somebody's asking about time frames, any particular asset you want to have a look at, if you want to put the time frame in as well, we can drill down to that. Otherwise, I'll start with the daily and drill down and up unless you say otherwise. So here, as I say, all week we've been moving lower, but if we got to the daily time frame, you see it's been in a big downtrend all of November. Back in the end of October, we got to 138.50. Looked pretty okay. We bounced up, but a big weak, a stronger dollar, weaker sterling, and this week, as I say, in this first couple of these first trading days of December, it's come under pressure. Both expectations got ahead of ourselves here in October that the Bank of England was going to move with its interest rates at its meeting next week. That is starting to dissipate. It's down to about 41% now from 46% just on Wednesday. I say many commentators have mentioned about the political situation. Personally, I think it's quite significant when the Prime Minister, even with an 80-seat majority, is getting called out to be a liar and getting called out in all sorts of other situations. There was his staff, obviously, having parties than when London was supposed to be in tier 3 lockdown. There's other parties that have happened this time last year apparently are getting investigated. These are Christmas parties that weren't supposed to have happened. Yesterday it was one party. There's up to 7. There's certainly 3 getting investigated. Anyway, all of this background just means it's an uncertain political outlook, and that doesn't help the currency pair. So 132 is where we've been moving lower, and that is certainly trending lower. And here on an hourly base, end of day basis, I should say, to show any strength really in sterling, we need to recover certainly over 133, but 133.30 is where that 20-day moving average. So you can see it's in a strong downtrend. The 50 period crossing under the 200 period moving average here right at the beginning of November. Big down day there on the 4th. Another big down day here on the 10th of November. We recovered a wee bit and then just been trending lower ever since. So pressure remains to the downside for sterling. Intraday, I don't know what time frame you're trading on, but if we come down the time frames, 4 hour, trading lower. Resistance has been the 50 period moving average, 20 period plane there. That's moving lower again. We did. Sorry, that was daily, wasn't it? That was the daily. Sorry, 4 hour. We're going down, aren't we? 1 hour. So far today, 50 is held. Or yesterday, the 50 held. It held twice. We got nowhere near it today. The 20 is very much in play today. We've tested it in this current hours at 132. So we're down, or we're back up now, I should say. And we've been as low, not as low as we got yesterday today so far, but that's our low for today, 131.70. And yesterday we plumbed these new 1 year lows down there at 131.60. So moving down as the news broke. So let me just go back to the news. The key news today is out. So another big positive for the US jobs position. The initial weekly claims has come in at 184,000 or 184K as Americans like to call it. Last week's been ticked higher to 227,000 from 222,000. Still very positive, and 184. So I might tick up higher. The ongoing claims, the continuing claims, which is the longer term unemployed, again tends to go against the short term quite often. And again, it's done it again this week. It's at 1.992 million. I mean, that's gone up quite significantly, over 550,000 from 1.954. It was expected to fall at 50,000. In fact, it's gone the other way. So that's nearly 100,000 variance in the long-term claims from the week before. That was the 26th of November, Thanksgiving. So that's a bit negative. However, it's still positive. It's under that key 2 million number. And the 4-week average is down to 218,750 from 240,000 last week. So that's another positive number. So the 4-week average is down. The ongoing weekly is a new record, 53-week low that will be, 53-year low, 184,000 for the weekly claims week of the 3rd of December. So it's positive for the US economy. It's more evidence of a tightening economy. And people will say, well, why is here we go. If you just go back to the 5 minutes, see the reaction. Why has the dollar weakened? Well, that's expectations that they may get pushed back. So the cable back to 132. Euro on the news. Again, simple sort of tick up. This is the 1 hour chart here. If we go to the 5 minute number, as the data has broke in the last couple of minutes. There we go. It's the 5 minute chart after. So we went down and now we're back up on the 5 minute. But overall, Euro's been weak today. Dollar's been had the upper hand. 113 is where the 200 hour sits for the 1 hourly Euro chart. So moving down. Emma, good afternoon to you, my friend. How are you? Gold and oil, says Emma Chai. So oil, start with gold. It's really been a bit of a sideways action. It hasn't had the safe haven lift that some of the other currencies like yen and Swiss franc had when the first spike of Omicron came around. This is the 1 hour chart. We've got the daily chart. Obviously, the 22nd there. It moved lower before the big news broke on the 26th. So it's been trending. This is the daily chart, and I'm sure you're well aware. You ask about gold all the time. Big move down. It's finally some sort of floor at 1770. So on an end of day basis, a break below 1770 here. Hopefully you can see that. These are all. Andrew and I use the same workstation, so these are all multiple lines on here. So 1770 is a big support area to the downside. We've had a big move down, and it's really can't really find much of a direction. It's been quite it's sort of a consolidated section now. So you could argue, technically, is it forming a base to move back up, or is it pausing, going sideways until we move to another leg down? We won't know until it's broken this range. So here, quite clearly, this is the daily time frame. Remember, I don't know what time frame you trade on, but here, the 200 day EMA now sits right on that psychological 1800. In fact, slipped under it a wee bit, 1789. So 1800 is a big wall for the gold market to get through to move back up. You can see here, that's 1805, 1800 here. We haven't closed on a daily basis over 1800 for one. What's that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 trading days. Still, and basically, since the Omicron worry broke, and you would argue if markets are worried, you'd have thought gold would have got a bit of a safe haven bid about the Omicron uncertainty. That hasn't transpired in the price action. We're very much below 1800. 1770 is our key support level. As far as the lower time frames are concerned, Emma, again, very little direction. We've got the 4 hour sliding sideways again. So we've got the top really since the 3rd of December here around about 1791 on the 4 hour, and the floor just below where we are at the moment, basically 1770 or 1775 is our floor in the 4 hour in that sort of channel. So that 1774 is in there for some reason. I don't know why it's in there, but that might be your floor for your 4 hour trade. 1 hour trades, we were down yesterday, having started the day positive. Biggest candle of the day yesterday was here at 1300 hours, and that took us lower into the close. We've gone sideways in the Asian session, and we've tilted over, rejected once, twice, 3, 4 hours, rejected the 200-hour moving average at 1787. And then we finally broke below that level here at 12 o'clock today, formed a new low. See how that candle's formed a new closing low for the day? There, see that? At what's that? 1782, and then we've moved lower quite significantly from there. So that's a break lower here at 12 o'clock, the 11 till 12 o'clock candle, and then we've been lower for the last 4 hours and tested below that 1774 level, which is on our 4 hour chart. So testing lower, that's still trending lower to the downside on the 1 hour time frame, Emma. If you want a specific time frame, Emma, please let me know. As far as US oil is concerned, it's sort of done the opposite direction. It's sort of tilted up. It moved up on the inventories yesterday. Inventories were a quite significant miss. Off the top of the head, I can't remember what it was. It was expected about 1.2 million barrel draw. It's not here on this calendar I've got here on this workstation, but it came in about 200,000 barrels. So we've rallied this week on the positive tilt that the Omicron news has taken, and it's swinging quite a lot because uncertain markets hate uncertainty more than anything, and because there's no actual positive news saying yes, it's definitely not as it's not as deadly. Yes, it is definitely more transmissible, which seems to be the case. So that's why we've perhaps taken a bit of a leg down today. But anyway, we rallied quite well this week as far as oil's concerned. Monday we were down here at $66, and we've been as high as $73 earlier today. So we've edged to the upside, and we've rolled over again, just like the that gold chart. Moving up yesterday on the inventories a wee bit into close. Lost a bit of our gain. Bit of a strong start to the day overnight in the Asian session. What time is that? That must be like 2 o'clock in the morning, that one our time. 4 o'clock, 4 to 5. Okay, so it was middle of the afternoon in the Asian session. Then we started to roll over. Again, another one that triggered low. This went a low an hour ahead of the gold market. So that's triggered low on our 10 till 11 candle here. So And then we've been lower for the last 5-6 hours as well. So we're down here at 71.22 again from that trigger at $72. So we've breached back below $72 and we've lost 80 cents at 71.20 at the moment. The 200-hour key support level sits below $71 at $70.80 is our next support. So you can see there again. You see how I'll zoom that in, you can see if I push it forward a bit, you can see how the Bollinger Band, the mouth of the beak, if you like, is starting to widen. So we've got a bit of a move down. We had a bit of a pinch in here, then we went sideways, and now we're edging to the downside. We're very much in the under half of the Bollinger Band, or the lower half of the Bollinger Band. As you can see, we're forming these new lows for the last 2 or 3 days, and that's where that 200-hour is going to come in there at 70.80. So teaking lower, probably on the. There's been no key OPEC news, or obviously worries about the border stress in between Russia and Ukraine. Although neither of them, Russia's obviously a major oil supplier. Major players in the oil. It's not a particular area that's going to cause an impact on oil supplies, but it's just adding to the tension. Obviously, the US and the Iranians are starting to talk again over the deal. Other countries getting involved in that deal that's taken off the table. So other things affecting the oil market other than just the Omicron outlook and obviously the economic outlook as well. Dominic, I tend to use the daily time frame, Dominic, but if you want to look at something specific, my friend, put the asset you're interested in, and the time frame. But normally it's 1 hour, 4 hour daily time frames typically. So these black charts, perhaps you can't see them very well. Good day, you Kompong. Your market analysis on Euro today made me believe that the market will be bullish. Does it mean the analysis was not correct? It's just an opinion. It's just technical analysis. Pong, my friend. Let's have a look. I don't know. Is it something we wrote yesterday or something, or something we said this morning? But it's been a bit choppy. So today, talking about today. So yesterday we had a pretty good run. We broke 113. I said earlier we got as high as 113.55. That's still looking quite bullish. But again, I said technically, it's that the break of the 20-hour moving average here this morning at 8 o'clock, the 7 to 8 candle. What was going on? Well, we closed right on the 20-day moving average. The parabolic SAR already flipped a couple of hours before, so that was a negative. That was a sign for it was perhaps going lower. It did break down. We're down for the day, so that was perhaps been a tentative entry on that 1 hour. That would have been another a stronger entry, because there you see, just look at these indicators I can see on the chart at the moment. So at this point here, what's going on? Well, the parabolic SAR already flipped 2 hours before. We go down to our other indicators are actually on this chart. So the RSI was already starting to slope down. It's only set at 7 here, which is a bit more interactive on an hourly day. So that was negative. The MACD, the more important, MACD was the histograms that got small. The signal line was already sloping down quite significantly, and this is the last one that happened. The signal line was breaking, testing the zero line. So that's another negative, and that's all just played out in the last few hours. So I don't know what you were reading, earlier, but certainly if I'd been looking at this at 7 or 8 o'clock this morning, that was looking relatively negative given what was going on as far as the indicators were concerned. The stochastics had been oversold and then bounced out the oversold area, but it's still very weak, and here we are still in the oversold area. The MACD here has moved down. The signal line's right on the histogram, so it's trending lower. It's in line with that, so it may have bottomed out. It may not breach the 113, but remember 113, all round numbers, whatever it is, 0 zeros or ending fives, markets tend to be attracted to them. But at the moment, this still remains negative. And if you'd been using this strategy, for instance, this crossing EMA strategy, which is what's set up here on this particular chart, where would you be? Well, you would have gone short here. Your stop loss initially would have been, if you're doing this in pure terms as we initially teach you, your stop loss was really up here, all the way back there above the turn. So you've got in here, and that's the stop loss. So it's a long way behind. You wouldn't necessarily have to have it that far behind, but let's just keep things simple to start off with. And therefore, you would be looking, there's different ways of running this. I'll put this on here. So that's your risk from here to here. You'll be looking at, 250 points. We haven't quite got there, even if we get to the 200, so a 1-to-1 risk-reward ratio. So would you have taken it, having your stop loss all the way back there? You could argue, well, it's quite a strong candle, this one here at 8 o'clock. So let's just count back 3 or 4 candles. So 1, 2, 3, 4 candles would have had our stop loss back here. So you could have had your, I'm not going to move that, is it? Your stop loss a wee bit closer, or even 5 candles would have brought it back down to here, would have brought the target much more into line. The other way to run it is use the ATR. The ATR would have talked about 9 pips per hour. So at this point, you were looking for 8, 9, or 18 sort of pips from there to give you a 2-to-1. There we are. So the ATR, the average true range, when this triggered short, which this is what the crossing EMA strategy tells you, 2 times the ATR here at 8 o'clock you'd been looking for 16 pips. So 16 pips from 113.26 would have taken us down to about 113.10, which is sort of just around about where we got to, around about here. In the last couple of hours, we'd have been in the money. So, and even with our stop loss there, or even with our real tight stop loss there, we'd have certainly that would have hit our initial target. 3 times the ATR would have, what's that? 8 times 3 is 24. So 24 is a wee bit sort of just ahead of the 200 period. So you're still short that if you're looking for 3 times the ATR. The other way that we teach is, stay short, trail your stop loss down. So by now we're down here. Your stop loss might be like 3 or 4, 5 candles behind. So your stop loss might be down to about here now, above those wicks there. And you get out when the candle reverses back and closes on the time frame that you're trading. So on this hour, back over the mid moving average, which is the 9 period. So again, you're still short on that one. So that's all short of them. So I don't know. I apologise if it was. I mean, the analysis yesterday might be for the intraday, and it was positive and it was going up. But we do get things wrong. Everybody gets everything wrong, and it's just part of trading. Being wrong is one of the big things you've got to get into your head if you're going to move forward as a trader. Many people can't do that, and have to be right all the time. It's a very significant trait that I found very, very difficult to get over. Being wrong, it's just irks my personality. But once that I realised that and I dealt with it, everything else sort of all fell into place. So anyway, best of luck, my friend. Keep in touch. Who's next? Why is there so much noise on your chart like in form moving? It's a very good comment. Very good comment. In my defence, it's because Andrew and I both use this particular workstation, so we're both fiddling with it all the time. So you're right, there is a lot of noise on this one, but it's I'm an old guy and I just like things sometimes to be as they've always been. So I like Bollinger Bands. That gives me the range. It gives me the 20 period moving average, which is one of my favourite moving averages of all time. And we've introduced this 5 and 9 crossing exponential moving average. So you could argue, well, it's a bit strange. You've got a mixture of moving averages. Moving averages are lagging, they're slow, all that sort of negative things about them. But it's something that's worked for me. And then what happens with this particular workstation, I'm afraid, as well, is that we'll demonstrate things for people live, and quite often they get left on the chart. So the parabolic SARs on here, actually it was a default setting, the parabolic SAR. Fractals that are on here as well sometimes. But you're right, sometimes too much information can be confusing, but and contradictory, which is what you'd expect. Not everything is in line. But as I was saying before about this 1 hour time frame, everything else at this point here, when our system was triggering short, lots of other things were saying short as well. The MACD was saying short, the RSI was down and trending lower, and the ATR was moving down as well. We don't use the ATR that way. But as Arslan, as you say, use what works for you. These work for me. Then it might not work for you or for anybody else. You're absolutely right, my friend. Euro dollar is buying long term. Well, if that's your opinion, is that an opinion or is that what you're saying technically? maybe 113. So when you say long term, the daily time frame, Yafet, is struggling to get over 113, as you can see. Excuse me. So we moved down significantly in November, but if we go back a few months, from this rally here all the way at 118.60, back at the end of the summer, the end of August into September, we've been trekking lower, haven't we? So September was down, then we consolidated somewhat in October, struggling then to get under 116 or get a break out of 116. Then we legged down quite significantly. Now it's another 300 pips lower now at 113. We tested as low as 111.82 towards the end of November, and we're back to 113 now. So that's the daily time frame. This certainly looks messy because it's details for an hourly lines on here. So maybe I wouldn't. Nothing technically is telling me that that's what you're saying is the case. I would argue, here you could argue the weekly is providing. Now we've had 1, 2, 3. We're into our third week now of perhaps finding some support at this 113 level. But at the moment, that's still, the weekly, the monthly, and the daily are all still negative. The weekly, remember, end of week, so we're still a day to go before this candle's complete, but it's a positive week, but it's a very weak range, isn't it? So that may be some sort of evidence of support. So zoom that up, sorry. So this is weekly for the euro. Very little range in the last 3 weeks on a sort of end of week basis. But the weekly 220 week moving average is all the way up there at 116, and that's where the 200 week sits as well. So the yearly average is at 116. So we're 300 pips below that level. Remember, that was a level we were looking to break as we were moving down. What did we say in September, didn't we? So this is the weekly time frame. So that may be a flaw. You may be correct. We'll see. Only time will tell. But there's nothing technically to say by that. There's a bit of a turn up in the signal line at the moment, but the week is no. So I can't make a decision on this current candle because it's not completed. Last week it was still negative. RSI was oversold, but it's been oversold since the middle of November. Stochastics was starting to tick up. It just about ticked up last week. So yeah, possibly a bit of interest. Big doji candle for that week, but it still looks weak to me. So that trending, the euro dollar is weak. It's down on the weekly. It's down certainly on the monthly here. This is the monthly chart. So this is going all the way back to, this is the beginning of the year here when we were all the way up here at 123.60 zone. We tested it again in the summer, and then we've been down for 1, 2, 3, 4, 5, 6, 7 months. 1 month to the upside, very, very weakly. So since June, we've been edging lower for euro. Dollar's been a lot stronger in the second half of the year, certainly. So we'll see how it all pans out. Yeah, I don't know what time frame you're trading on, my friend. Arthur, good afternoon. Hi. Hope you're still staying safe and being safe. No, I am a new user. Can you help me? Of course, we can help you. We're here to help. What do you want to know? Come to our webinars. This is a sort of a live analysis for traders. If you're completely new, this business is all about understanding yourself and understanding your psychology, risk management, all the sort of boring things that you probably didn't think it was about. But that's what the principles of trading is. Trading is risky. Trading, Forex is particularly risky. Safeties, it's a risky business. So what do? You minimize your risk. How do you minimize your risk? You get as much education as you can. You get as much confidence as you can. You perhaps find a mentor. But you've got to understand what you're doing. So you need to understand, do you understand what margin is? These are just rhetorical questions. And for everybody that's new or anybody that's trading for any length of time, if you don't understand what the spread is, if you don't understand what margin is, or the leverage on your account, or a pip value, if you don't understand any of those basic terms, or equity in your account, difference between the equity and the balance of your account, you've got to understand all those terms. Make sure you do before you risk any of your real money. Watch our webinars; they're all there to help, and then try and find a system and a strategy and approach that works for you, because we're all different. Most strategies work, and they work well enough The problem is most people can't stick to the rules. They don't have much patience. They can't, even when they're winning, no discipline, no patience, no accepting of losing, and that's one of the big problems many traders have. Accepting that they lose, and you do lose a lot when you're trading. You've just got to get it around your head. Any thoughts on the downgrade of Overgrad et al. On defaulting debt? Market seems not to care. No. Interesting comment, that, Philip. Yes, I thought that might have had a bigger impact this morning. It's sort of been shrugged off. Any of you that don't understand who Evergrande are, they're one of the biggest property developers in China, and they're defaulted there. 28th of December was the big day where they were due to pay back some coupons on bonds to dollar bondholders, and these guys are overseas investors in a big Chinese property developer. So you think, well, that's a bit of a risky investment anyway, isn't it? Well, yes, it is. But these guys, obviously professionals, and know what they're doing. The thing about it, Philip, is that although it's a $300 billion default, if the whole thing collapses or implodes, the exposure to the sort of outside of China, the Western world, if you like, is quite limited. So although it was a big story when it broke, and it will have a significant impact on potentially on the Chinese economy, because still 30% of wealth is held in property in China. And obviously Xi Jinping is obviously tightening things. The last 18 months been tightening things up, particularly started with tech companies. Jack Ma fell foul of the new regime, and Xi Jinping continues to tighten the screw, both in listings in Hong Kong, Chinese companies delisting in the United States and overseas, and going back to Hong Kong or back to China itself. So. It should have perhaps had a bigger impact. Certainly when the news first broke. Perhaps the market got a little bit sanguine about the whole Evergrande thing. But certainly, as I said when this first broke, it's not just going to be Evergrande. If Evergrande is suffering, there's certainly other property developers there. And that Kaiser is another one. They defaulted this week as well, I think, didn't they? But it's a much smaller scale. But yes. It's certainly one to watch. I don't know how your portfolio's configured, Philip, but certainly any international portfolio will be have some sort of exposure to China. One would expect. Fair comment, Osama, my friend. Stuart, you always say make your trading simple, but you have 7 indicators on your screen. Fair comment. Guilty as charged. Absolutely, yes. You're absolutely right. Should we simplify it? Let's open a new chart. So there we go. Let's just put don't know what my templates on here. Not sure what templates I've got on this. There we are. There we are. So I'm moving. That's my default moving average chart. I could take the Bollinger Band off and just have the moving average on. There, Osman. Fair comment. Guilty as charged, my friend. How are you? Hope you're staying well and staying safe. Osman and everybody else, it's, as I said earlier, sometimes we add things to the charts and they just get heavier and busier as time goes on as well. Obviously, lots of people don't trade with any indicators. They're price action traders. They're just looking for the candle patterns, or they're looking for the line patterns, or the Heikin-Ashi candle pattern. They're waiting for the change of the colour. That's all they're looking for. Use what works for you. But yes, that was a very, very busy chart, and don't over busy it. I always say that, don't I? But keep it simple. What works for you? You're absolutely right, my friend. Icy, what are your thoughts on gold? Well, I'm a bit disappointed, to be honest. If somebody asked me my thoughts, I would have expected, anticipated a bit of a rally in gold when Omicron broke. Didn't happen. We'd had a rally before then. We got to 1875. It's funny, actually. I was looking at. We do a bit of fun, really, at this sort of towards this time of the year about outlook for 2021, and I was looking at the little spreadsheet we'd done probably about this time last year about where we expected gold to be at this time the 31st of December for 2021, and we put a number of I don't know who personally, it doesn't really matter who it was, but I mean, as a group, we put in 2,175, and here we are at 17, finding support at 1770. So we're way, way away from anything like that. So it's just one of those things, isn't it? So my thoughts on gold, you would have thought it would have had a bit of a lift when the worry about Omicron appeared. That hasn't happened. Dollars had more of a lift. The yen has had more of a lift on the uncertainty, but also the uncertainty seems to be easing, but certainly as a trend following sort of guy, gold is short. It's weak, it's moving lower. Is it forming a base to move higher? Possibly. Is it stalling before it moves lower? Possibly. Don't know at the moment, but at the moment, what I could tell you here on the end of day basis, we had a big old move up in November from this sort of base where we are now. Big old move down in the end of November towards the into the end of November. Now we just slid sideways again for December, bit like we did during October. But October we were sliding through sort of 1800 test, and we're quite significantly below that moment. But remember, with gold, IC and everybody else, it can have some very, very volatile days, as you can see here. So don't get caught out intraday if you're in a day trade. I don't know how you trade it. But certainly the daily time frame is biased to the downside. So the 4 hour is a bit more choppy, but it's still sort of edging lower, and it has been since this break of that level there at 1803 way back at the end towards the 23rd of November. That date's now when we had this big move down. And then 1800 still plays a level. And intraday today, yesterday we moved up, then we moved down, and we've been under the 200 hour moving average since 1 o'clock yesterday. So day and a half we've been weaker. Today we broke below yesterday's low at 1779.50 in the last couple of hours, and we've punched what looks like a new weekly low. Is that right? No, not quite. 1773 in the last hour. Our low this week has been down there. When was that? Was that Tuesday, the 7th? Yeah, 7th. When we went down to 1771. So a big round number I've talked about before on an end of day basis, 1770 becomes key. So I don't know what time frame you're trading, but there we go. Euro Oz, I was looking at this early today, Hadid. I don't know why I was. It looked like it may be forming a floor here on the 1 and 4 hour time. And this is the Euro Oz on the 4 hour time frame, Hadid. But certainly using this strategy, it's been long since Wednesday. Oh, it's not Wednesday, is it? It's 26th of November, it's the 4 hour. So that, again, and something I was talking about before about consolidate. Look how that's just not done anything all of that time. 18th of November, all the way through the 25th of November. It's broken out. It's broken the 200 period. The fractals have come into play here again. Lots of indicators on this chart again, but so again, that was very much that's a very, very positive candle before what's gone on. The candle that broke before that was this one here on the 4 hour. That's the big breakout one there. That's the 8 till 12 candle there on the 25th of November. That rallied, retraced, rallied, and then we went all the way into the end of November into December. We went all the way to 161.80 up here. Then it's rolled over, and then it's finally triggered short. Well, it's closed the long, gone long there. That last close of your long position would have been on that candle there on the 6th of December. And then, again, just using this crossing strategy, that would have triggered. You might have got in then, but that's probably wouldn't have broken under that there. That's a weak break because it's a very narrow candle, but that would have been enough to trigger a short there at the end of day on the 7th of December, and you've been short ever since that. Again, if you're using this, just use this as get out at the middle point of the moving average there strategy. You would have got out just this morning, so you've been short for a few days. Euro Oz. So you could argue, I think that's why I was looking at this earlier. I can't remember what it was. It's definitely a little bit of a flaw there for Euro Oz 4 hour traders. That I say using this strategy, the 5, the 9 EMA and the 20, the midline of the Bollinger Band, you would have been out of your short, so you've made some nice pips on that. You're not yet long on this strategy because the blue line needs to cross over the yellow line and close above it, and then the candle needs to break over the next indicator, which is the 20 period moving average, which is this one here coming down. The blue line, I guess, is a 50. Yeah, that's the 50. Let me change that. That's the 50 period moving average, so they've crossed. That's negative still, but there's a bit of a floor forming there, quite a strong floor of a number of candles. So it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 candles forming quite a strong floor there, or a range at 157.85 to 158.40 is your range. The ATR on here is 46 pips on the 4-hour time frame, so we're looking for a breakout of that range. Certainly, the last candle has closed my short here if I'd been using this strategy. Is it enough to break out? Probably not, because it hasn't broken out yet. So I'd like to see a candle closing up where this fractal high here is here. So if the current candle here, it's down at the moment, closes up, or the next few candles close up here somewhere, that should break out. That's my thoughts on the 4. Did you actually say 4 hour? You didn't, did you? I'd read that as 4 hours, but anyway, that's a 4 hour. So the daily's probably quite, oh dear, the daily's a bit more. Bit more choppy. Look at that. That's a big rally, and it's peaked out and it's moved down. But again, just using this crossing EMA strategy, it's obviously not perfect. It's been sort of long for November. Closed out earlier. Let's take some of those lines off. That's confusing me. Delete some of these. That would have been a big long, and it's closed out flat on that because it's very, very choppy. Just further, that's the 4 hour. The 200-day moving average sits below where we are now at 157.60 is our support, basically, Habib. So that's your support. It's moved down very aggressively in the last this week. Interestingly, obviously we didn't get any really news from the RBA this week, but Euro's been relatively strong later in the week. But here against the Aussies, it still remains quite weak. So on an end of day basis, shouldn't it? I don't know why. Sorry, I don't know why I did with 4 hours. I thought you'd said 4 hours. Sorry, I just read what you'd asked. So support. Let's go down the time. So the main support is there at 157.60. That 4 hour cluster is just below there now. We put this 4 hour consolidation range, and again that would have been short, as we just said before. So for me, that's not really broken out yet. Change that to a dotted line because it's the 4 hour one. Okay. So our 4 hour range is sort of through there. That's our 4 hour range, 158 to 158.50. That's a 50 pip range on the 4 hour. Our daily support is there, 157.60, some 40 pips lower. So we need to break out of that to the upside. So yeah, if that's going to move up, it needs to break up here. But the daily is obviously rolled over really aggressively. So trending, it's closed any long you might have had there on that day on Tuesday. And that's maybe looking to go short, to be honest, if that goes over. But really, 157.60 is your support level to be watching, even on the end of the day basis. Especially new variant COVID, I see. What are your thoughts on gold with the especially new variant? Yeah, well, the new variant COVID so far, what we know at the moment is relatively limited. We know that the UK is saying, that's where I've picked my news up from, the UK is saying it's more transmittable, 4.1 times more transmittable than Delta. England have moved into new COVID restrictions because of Omicron, but there's also lots of political uncertainty in the UK, so don't read too much into that, I would argue. In South Africa, where it was first identified, cases have gone up very, very significantly, 300% in the last 3 weeks. Very transmissible, but there's no spike in hospitalizations, and therefore there's been no spike in deaths either, particularly from the Omicron. The caveat of that is that most people that have contracted it are younger people. Most people that have contracted it in the UK as well, again, these are two countries I've been following quite most closely, again, are younger people. So it hasn't moved up to the older age groups, but obviously the vaccines now are quite high, and there's different vaccination regimes and levels within the two countries when we're talking about South Africa and the UK. And Pfizer, BioNTech, the people that first, the group that developed one of the vaccines, talked yesterday in the study that they've done in a lab, not on people, but in a lab, that if you have the two vaccines and the booster, it's effective against Omicron, is what they've said. They're the first of the major vaccine companies to announce that. Also news this week, SmithKline, big on the called SmithKline Beecham anymore, GSK as they call now, with their and Merck with their antiviral drugs are saying that they appear to be effective against Omicron as well. But it's very early days yet, and these studies have been on some very small data samples and very small age groups, so it's difficult to read too much into it. But at the moment, it looks like the market might be shrugging it off because equities bounced back quite aggressively this week. But the S&P 500 is back within 1% of all-time highs at 4,700. Closed over 4,700 yesterday for the first time in a long time. So bounce in equity markets shows there's a bit more risk in the market, which is probably why gold has been, not doing so well. You talk about gold. There we go. Gold at 17. This is on the 1 hour, but the daily is that big 1770 support. Here on the 1 hour, we've tested, as we said earlier, under 1775 today. So yeah, remains really to the downside. But even such great news for you, so it's still struggling to make new lows. Yes, as a man, that's related to your comment about the indicators and euro, something else as well. Yes, indeed it is. Fast Tech, Melina, Fast Tech. Is that a company? Fast Tech, or are you talking to somebody called Fast Tech? Wasn't it? That's it. There's no more comments. I'm going to see if I can see anybody on Facebook. I actually can't see anybody on Facebook. I can't. How can I log in? Can I? Yeah. So, so let's have a quick recap. What time is it? It's I've been here nearly an hour, but lots of good questions today. Thank you very much, everybody. So all eyes are very much on where are we? Tomorrow, US GDP, US inflation data. But before that, we've got German monthly data for November, the harmonized index of consumer prices, as the Germans call it, HICP, so consumer price inflation, CPI to you and I. Tomorrow morning, we've got some money supply data from China. Overnight, there's a glut of industrial production and industrial output numbers from the UK. Tomorrow, trade balance as well from the UK. The monthly GDP, 0.4 of 1%, expected to slip for October from 0.6 in September. Miss Lagarde's got a speech all ahead of the big data of the day, which is that US CPI data, 6.8% headline. That's the one that's going to grab headlines, especially if it moves over the psychological 7%. We shall see. 6.2% last time, 6.8%, 5.84% previously. So quite a heavy day today for a Friday tomorrow. So it's not just the US CPI, but that's what most markets will be focused on later in the afternoon. 1:30 GMT, that data comes out. And then we've got the University of Michigan consumer sentiment and inflation outlook. So the second week of December, closing with some quite strong data, but really markets are also looking forward having had a very benign week for central banks from the Bank of Canada and the RBA. Maybe some more fun and games tomorrow next week from the Swiss National Bank, Bank of England. More importantly, the Fed on Wednesday. So Wednesday the 15th, Thursday the 16th is the Swiss National Bank and the Bank of England. Remember, the sterling, rallied on expectations that they were going to actually chatter that they were going to be moving rates up in their meeting in December, and sterling rallied quite significantly here. This is cable over November and December, and it's fallen ever since. So I think markets certainly got ahead of themselves there. Usman, no problem, my friend. I like your comment about a cluttered chart, and here we are. Here's another example, isn't it? So what we've got here, we got 1, 2 moving averages. We've got the Bollinger Bands. We've got fractals. We've got parabolic SAR, and then we've got the RSI, ATR, and the MACD as well. Yeah, so don't overcomplicate things, but it's just something that's always been on charts I've used, Usman. So don't worry, my friend. Hadib, I hope I answered your question about Euro Oz. It looks like there's a bit of floor forming there. I see, as far as gold's concerned, it's a bit nonplussed. 1770 is your big support area. 1775 intraday. The Evergrande issue, Philip, it didn't have the impact perhaps we were expecting, but certainly the major repayment is the 28th of December. So watch that as well. See if they've obviously defaulted already, so things are clicking into place. Euro, Yafa, 113 is that key pivot area intraday here, and we're still holding above that quite significantly. Big support there intraday at 113, but it's been short today, and overall remains to the downside. Big strong day yesterday, broke back over the 20-day moving average here on an end of day basis, so starting to tilt up potentially. Wants to move higher. We want to hold 113 and then break 50 pips higher over that 113.50 zone. Would take us back moving higher against the dollar. So there we go. Hope you're all well. Stay safe, my friends. Join Andrew tomorrow for end of week wrap. As I said, lots of data tomorrow. The top of the shop is the US CPI, but we've got that UK data in the morning. We've got the German inflation, and then after the CPI from the US, we've got the stuff out of the University of Michigan. And then it's the normal end of week stuff as well. Remember the CFTC, the futures markets, where the big players think where all their positions are. So that's always worth having a look at the commitment of traders report late in the day on Friday. So take care, everyone. Stay safe. Join Andrew tomorrow, and we'll see you all again then. All the best, everyone. Bye-bye.